Hey, welcome to Business Credit Decoded, or otherwise known as learning how your business credit scoring really works. I'm Joe Nielsen, president of Clear Capital Group, where we advise and consult with our clients, whether they be business owners, entrepreneurs, or real estate investors, on how to strategize their funding and how to best position themselves and their entities to get that funding that they need to be successful. Business credit, as a lot of people have never even heard of the term. Business credit actually is a credit profile that is linked entirely to your legal entity or your business entity. Nothing of this is going to be personal. So you're not going to have to secure your mortgage onto a business, or you're not going to have to leverage your personal assets to go ahead and move forward on building business credit, which is fantastic. Business credit, you can actually qualify for credit cards and credit lines and even longer term loans with great rates and long terms. A credit profile can be built completely for the business and separate from your personal credit profile. And what this effectively does is doubles your borrowing capacity, because you can now apply for personal credit over here, be awarded what you can, and then apply it with your business on the other hand and be awarded what they'll award you there. Thus, combine the two is now double what you would have got otherwise. Business credit scores can be built in a fraction of the time that personal credit scores can be built. Personal credit, as you know, can be built over a series of years, painstakingly paying bills on time, managing debt to income, managing your utilization rate, your mix of credit, all that kind of things. And we'll actually see here in another slide all the variations that go into a personal credit. On a business, however, you can build it within 90 to 150 days, which is much, much faster. And there's only one thing that you need to do in order to effectively grow that and build it. So we'll learn about that as well. Approval limits are going to be 10 to 100 times higher on business accounts versus personal accounts. This is huge for businesses who want to have the necessary cash or operating capital to take down big opportunities that come their way, expand operations, hire more people, manage cash flow inefficiencies, and so forth. And the business credit benefits go on and on and on. When done correctly, business credit can be built regardless of your personal credit quality. So back in 2008, 2009, and 11, or through 11, a lot of people's personal credit got smashed and hammered. A lot of businesses went under, and even until today, a lot of these same people were running successful business ventures, but their personal credit got rocked, and now they're trying to apply to get working capital and things like that and expand their business in this relatively good economic environment that we're in. But banks and credit unions and other lenders won't lend to them because their personal credit is terrible. If they had known how to build business credit along the way, they could have offered their business credit instead of their personal credit and been awarded that money that they really need to grow. And here you go. I talked to this point a little bit earlier, where you don't have to put your personal items on the line. You don't have to secure your house or get a home equity line of credit. You certainly can, but a lot of people don't want to do that, and that's perfectly understandable. With this business credit, you really don't have to do that at all. And this will increase your chances of approval, the amounts, rates, and terms. I like to say that if there's a very large rock sitting in the yard and you need to go pick it up and move it, yeah, you may be strong enough to do it on your own. However, if you have several other people helping you, you've doubled your lifting capacity and your success rate goes through the roof. Same thing with going and getting credit or loans through a business entity. If you have business credit established, you've effectively cloned yourself and doubled your capacity and increased your approval success rate and so forth. Business credit saves businesses. How? Well, we talked about that just a little bit earlier. If those businesses and individuals who run businesses knew that they could build a business credit profile which is separate from their personal profile. They may have been smashed in the economic downturn, and their personal credit profile may have gone the way. However, they could have still gone to a lender and offered their business credit profile as security, as proof of a good risk, and they could have still gotten that money that they needed to save their business. Just like on the personal credit, there's going to be reporting agencies on the business side, and there's going to be 3. It's going to be your Dun & Bradstreet, your Equifax, and Experian. So you won't see TransUnion here. They're not participant here. And let's go through these a little bit. D&B is the largest, and they've been around for quite a long time. They're located in New Jersey, and they use what is called a DUNS number, a 9-digit number issued by this company, and it's signed to each business location in the database that they have. Governments, large global industries, companies, municipalities, even the European Commission and United Nations use the DUNS number to identify and assess the risk and lending risk of businesses around the world. So the DUNS number is very much a pillar of something that we need to focus on, learn about, and build our business credit around. They have something that is known as a paydex score, and it goes all the way up to 100. 100 is the best you can get. Typically, if you're below 70 or 80%, you're considered a fairly high risk. So you want to break that 80% or that 80 paydex score number. And we'll teach you how to do that. Personal credit scoring, we mentioned this a little bit earlier. There's a lot of variables that go into how this is built and how it performs. You may or may not be aware of it, but 35% of it is your payment history. 30% is your debt, or I should say your balance to limit utilization. Then you have length of credit history. So if you're a brand new borrower just out of high school or college, you may not have a very long credit history. Accumulation of new debt, so how much new accounts or debt you've acquired in the last 10 months or so. And then your credit mix. You have auto loans, mortgages on your home. You have a credit card, store credit, all that kind of stuff goes into there. So that builds and accounts for your personal credit score. On your business side, however, it's only based on one thing, and it's, does the business pay its bills on time? And then there's a gradient of the different lengths of time that your business will pay. So as you can see, everyone that you transact business with is going to say you're going to have a payment due on this date. And then from that date beyond is where you start to see the decline of your paydex score or your business credit score. So if you pay on time or you pay early, you can expect that your paydex score is going to be fairly high, indicating a very good risk to take from a lender's perspective. A business credit score is going to be just like a consumer credit score. It's going to be a mathematical model that is going to use to assess or predict the risk of that person or entity being delinquent in a certain amount of time. So for the business, it's going to be 90 days within 12 months. On a consumer, it's going to be 90 days late within 24 months. A little bit about Experian. They're actually a division of TRW, which was an automotive electronics giant founded in 1901. And they use what is called an IntelliScore or an IntelliScore Plus of 100. So there you go. This is a little bit different than the DUNS because this number actually puts you and your business, I should say, and compares you to a wide spectrum of other businesses, and then you fall within that spectrum. So it's a comparative model of how you perform. And then here's Equifax. Equifax was founded in 1898 by Cater and Guy Wolford. And Cater actually got the idea from his own grocery business, where he collected customers' names and evidence of their creditworthiness, because as a good business practice, he wanted to see which consumer profile was most likely to pay him back for the goods and services he provided. And so now Equifax is this big business and personal credit company, and they have something called a credit risk score. So it's a little bit more to the point as far as telling you exactly what it's for. They want to say, what's the credit risk? And then they put it in a scoring model. Again, it's 1 to 100. A lower score indicating a higher risk. So across all these three reportings, the higher or closer to 100 you are, the better you're going to be. So a business starts building its brand new credit profile much the same as a consumer does, only much, much faster, actually in a fraction of the time. But there are a series of steps that you need to do, whereas personal credit, yeah, you throw any of those steps together in any kind of order and you manage them appropriately, you can build credit. However, with business credit, there's definitely some steps of progress that you need to take. And the very first one that is super essential is establishing credibility. Before applying for business credit, a business must meet and ensure that it has all of these lender credibility standards checked. Many people don't know, but there are unpublished credibility standards. There are 20 different credibility points that you need to meet for your legal entity before you'll even get past the filtering process of their electronic applications. And here we'll go through a couple of them. Business and legal name, including your DBA, need to match. You need to be registered with an EIN. Your business address needs to be a brick and mortar place. Even a virtual office will do. You need to be listed with 411. Additionally, phone and fax numbers are important, even though fax is kind of out. A lot of medical professionals still use it. So a phone with a local number and a 1-800 number is absolutely crucial. Website and email address. You don't want to have a Gmail or Yahoo or Hotmail kind of account. You really need to use an email address that correlates with your business website's URL. So johndoe@johndoe.com or .net or something like that. Oftentimes we also want it to be respectable. So you're not going to say party chick, 2000 or something like that. You want to make sure that it's professional and it represents your business. Additionally, your website. This is considered a must because they're so cheap and easy to set up and maintain nowadays. It's the face of the initial interaction between your business and your consumer, your clients, whatever it may be. Bank account. Real estate investors in particular get this one wrong all the time. They set up an LLC to hold properties in. What they don't understand is that if they are actually trying or actively trying to build business credit, lenders won't recognize that legal entity as legitimate for being lent to if they don't have a bank account or a business bank account linked to it. Even if you had an LLC or a legal entity up for 10 years, but you've been using your personal account to run the funds through, you could go to a lender and say, yeah, we've been doing business for 10 years, but they still won't recognize it because there's not a separate bank account for the purpose of business. So that's very important. Don't put that one off either. Licensing, of course, pay your dues, make sure you're legal in wherever you're at. Number 2, obtain your business credit reports from the 3 different bureaus. We'll teach you how to do that as well. Step 3 is get what we call starter vendor accounts. And why are they starter accounts? Is because you can get them without using your social security number. It's imperative that you don't include your social security number because if you do, they'll report to your personal profile, and that's not what we're after. We want to build a business credit profile around an EIN. So we get those vendor accounts, we use them within a 90-day period, and it starts to report. As those are reporting, we then graduate into revolving business credit accounts with store cards. Now these store cards, as you probably know, Kohl's, Walmart, things like that. So you can use them over and over and over again, and it's going to continue to build your credit profile. And here we go. We're going to continue to grow it and keep using those various different kinds of credit. But what's the most important thing to do? Pay them on time. Whether it's $25 or $5,000, make sure they're paid on time. And we'll get the most appropriate vendor and store credit accounts because they're going to be the ones that actually report. Many times businesses think that they're building credit because they have a lot of vendor accounts or store credit and things like that, but they never obtain their business credit reports to verify that there is reporting actually taking place. So that's a big pitfall that a lot of businesses make. So make sure that you understand how to get that. We'll teach you how to do it as well. As you're going through the process and you're using them responsibly, oftentimes you'll be offered by the lenders, hey, you know what, you're doing very well, you're paying things on time, let's raise your limits. And that's great. If they don't do that, then you need to reach out to them and ask for that raise. Because you have one goal in mind: establish a history of responsibly managing credit and large dollar amounts. If a business enterprise is in the marketplace to make money, it needs to show history and a record of using that money responsibly. And debt allows us to shortcut that process, shorten that time frame to build that portfolio and record profile. So I hope you enjoyed this short presentation. We went through it pretty quick. There will be other videos, other webinars, and much more in depth, but feel free to reach out to us with any kind of questions you may have, and we'll talk to you next time.